We come out of that to take you to the ENCA Money Desk. That's where we find my colleague Devon Morgan for some analysis. So 3 of the 5 Monetary Policy Committee members deciding to hold interest rates at 3.5%. Devon, essentially, what does that mean?
Quite surprising, I'll tell you that much, to some extent. I mean, we were divided as far as analysts are concerned on whether or not the Reserve Bank would indeed cut rates. And we thought, if the Reserve Bank didn't move to cut rates by 1/4 percentage point today, at least they would do that down the line, perhaps in November at the next meeting. But it seems as though the Reserve Bank is basically telling us it's done all it can to react towards the devastation COVID-19 has done. It's also saying the next move it will take, according to its model, is actually a hike in rates. So I think that comes with a little bit of surprise. And the bottom line is, like you just said, 3.5% on the repo rate. If you look at the prime lending rate of the bank, that stands at 7%. Remember, throughout the year from January, the Reserve Bank has already cut 3 percentage points off your interest rate. But I tell you what, let's speak right now to the FNB chief economist, Mamello Matikinca, to get her interpretation of this. Mamello, I tell you, I was somewhat surprised that at the end of the day, we've got not only do we not get an interest rate cut, but he says the next move might very well be a hike. Were you surprised?
I think, the rate at which that model incorporates an interest rate hike is certainly not our view. I think what is quite interesting is the revisions to the forecast. They expect growth to be considerably lower than what they had initially thought when they met in July. And inflation is somewhat higher than what we expect. So I think the turn of the cycle will hinge quite a bit, Devon, on whether the forecast revisions that they have implied in the statements today actually materialize, because they do have inflation lifting and growth improving quite, I would say, notably relative to our forecast in 2021 and 2022.
Yeah, it just seems at odds that if you look at, some of the fundamentals that we are always told traditionally that the Reserve Bank uses to decide on rates, that's inflation, number one, in growth. On both those levels, certainly in the near term, our growth projections have been lowered to, minus 8.2% from the Reserve Bank. And then they went on to great lengths saying that, look, they really think inflation is under control. But I see in that last question there, the Reserve Bank governor really alluding to the fact that this is all they can do. Now it comes to the terms of structural reform in the economy to build it up. Do you get a sense that he's pointing in that direction?
So I think, this is a point that he's, I think tried to reiterate a number of times, that there's only so much that monetary policy can do. I mean, since the beginning of this year, they've cut rates by 300 basis points, and we've seen that it has provided some level of relief to the consumer. But I do think that if one looks at the projections that they have for economic growth, it certainly suggests that demand should remain muted. I think, a growth rate of negative 8.2 is quite notable and certainly marginally higher than ours. And we are of the view that, unemployment is going to remain quite high. Demand in the economy is going to remain low. Demand for services is going to remain low. So that should keep inflation slightly lower. Perhaps, the inflation outlook also hinges on what happens to the currency. If the assumption is that we see further depreciation of the currency following the NTBPS, then I guess one can understand why they expect inflation to lift. And I think on the reform, we cannot stress this point, I think, hard enough, that we need some sort of reform to get the economy going. I share his sentiment that there's only so much that monetary policy can do. While we are seeing some announcements come through from government in terms of some of the initiatives that are coming up, it's quite important that they do implement those reforms for us to see a lift in growth.
The consumer's going to have to look at this a little bit differently now, because as I say again, the next move on interest rates by what the Reserve Bank says this afternoon is likely, according to projections, to be an interest rate hike, all things being equal. So again, the pressure is on government and that NEDLAC plan that has to be passed by government to boost up the economy. Again, I suggest to you that the Reserve Bank is in its own way telling us we've done all we can.
Definitely. I think if one looks at, I think the governor stresses this in his statement that, the cuts that they've implemented has provided some support, but at the same time, we've seen that some of the expenditure that has come through in the third quarter has been on the back of consumers drawing back or drawing on some of the savings that they've had. So that has enabled some level of activity. We are of the view that, we're going to see an increase in the unemployment rate. I think some surveys point to around 3 million jobs being lost. And I think that a turn in the cycle while the economy is still operating at these levels is going to be quite negative for consumers. So it is quite urgent and very important that the government implement some of these growth-enhancing reforms.
And just one more thing. I mean, of course, the rand is also another important factor because a weaker rand, of course, would feed into inflation, Mamello. And again, he says he's playing it by ear. There are events that could take the rand weaker. Not many events that could make the rand stronger, as I see it. What's your take on it?
So I think, he mentions that, there's some sensitivity to news flows. I think those are the words that he used, and the effectiveness of policy that could potentially be positive for the economy and against, consequently, the currency. So I think the big event that we are all watching out for is the MTBPS next month. And there's a lot of risk around that given the state of the fiscus. I think that if the MTBPS delivers on some of the promises that were put forward in the supplementary budget, that could potentially bode well for the currency. We certainly believe that we're going to see, a level of rand depreciation back to trend. And I think, if the rand depreciates by more than what we anticipate, that obviously has negative implications for inflation. And I suspect if one looks at the SARB's model, that they have a notably weaker currency embedded in their model.
Yeah, well, that's very interesting. The FNB chief economist there, Mamello Matikinca, thanks very much indeed for talking to us. So that's the wrap then. Your repo rate from the Reserve Bank staying steady at 3.5%. It means that the prime lending rate at banks now sitting at 7%, as it did previously. Collectively, the Reserve Bank has cut interest rates by about 3 percentage points as we try to navigate through the COVID-19 crisis. The press or delivery of that announcement today suggesting that the Reserve Bank, as we heard, has done its part now to intervene in the COVID-19 impact. But of course, it says it will assess the situation and base its next move on data. More news coming up after the break.